Hi there, guys. We're back again at it. So, in today's lesson, we're going to be continuing with our topic of budgeting. So, we're going to look at the portion of the debtors collection schedule. So, basically, what a debtors collection schedule is used for is it is used to forecast the amount of cash we are expecting to receive from our debtors, or otherwise, we're expecting to collect from our debtors. So we are going to be making use of credit terms to determine how much we're receiving and in which month. All right. So without further ado, let's get into it. So over here we have the information A, which shows us the total sales for the period July to November. Okay. Now and then here we have the debtors collection schedule. We're going to fill this up just now. And over here we have the cash budget. So after preparing this, after getting the collection from debtors, we're going to post it in the cash budget. All right. So now, looking at information A, we have July total sales of 476,000. Sorry. Now that we have 476,000 of total sales, we're supposed to get the credit sales. So always, when you prepare the debtors collection schedule, the first thing you do is to find the credit sales. All right. So in our case, the credit sales are 142,800 rands. Okay. So now this was given to me, by the way. Now this was just given to us, so we didn't have to calculate for it, luckily. But yeah, basically, this is what we do. Calculate for the credit sales first for every month. Okay, we don't just do however we please. Calculate for the credit sales for every month. All right, then from there we're gonna take the credit sales for July and see how we're gonna collect the cash for July. Okay, so we're gonna use a little something I'd like to call let's call it the stem and branches, because it has a stem and branches also. So now, to make use of that, we're gonna say now we're gonna draw our 3 branches like this. 1, oh, that's a funny looking branch. 2, and last 3. All right. So now, given that we have these 3 branches, it's usually 3 according to these credit terms over here. So now they're saying we're expecting to collect 40% in the month of sale to receive a 5% discount. We're expecting to collect 50% in the month following the month of sale. Okay. And 7% we're expecting to collect it in the second month following the month of sale. And as we know, 3%, there are those people that just won't pay us. So 3% of our total debtors are irrecoverable and written off in the 3rd month following the month of sale. Alright, so now a month of sale, it's July. Alright, so given that our month of sale is July, we're going to input that right over here and say July is our month of sale. Let me write that neatly. Yeah, so now we're saying that July is our month of sale, which is our stem. Yeah, I think it's safe to say July is our stem. Now that we have July as our stem, the first month, the month of sale of July is July, which means that the first collection will be in July. So right over here, we're gonna put July and actually state that we're collecting how many percent? We're collecting 40%, but we're going to receive less 5% of that 40. All right. So in July, we're going to be collecting 40% of the 40. We're going to collect 40% of the total credit sales from July and receive 5% of that 40. Okay. All right. So then right here it says 50% is paid in the month following the month of sale. So we're gonna come right here and say that the month following the month of sale will be August. So we're gonna say August. We're expecting to receive 50%. So we don't have a discount, unfortunately, on the second month of sale. We only have it for the first month in this case. All right. Then the third month, it's July, August, and the third month will be September. So on the last branch, we'll have September, where we are expecting to collect 7% of the credit sales. All right.